Yeah. Hey, Joe.
Hey, how's it going, Dale?
Why don't you grab the screen, buddy?
All
And,
right.
let's see what you're paying attention to. Happy New Year. I know it's February, but Happy New Year to you.
Let's see.
It's a great year for you.
Can you see my screen?
Not yet.
Not yet.
I see your name.
Hold on. You cannot start video because the host has stopped it. Wait.
Oh, here, let me do something. I'll grab it and then I'll stop sharing and then now try it. Try it now, Joe.
Huh. Still have the same thing.
I wonder if Blake.
Oh wait, let me try this. Hold on one second.
All right.
What do I need to do something?
Joe's having a tough time sharing his screen.
How's that?
You're okay.
Hey, correlations.
Thanks, Blake.
Yeah.
All right. Nice presentation. Okay, so looks like you prepared something for us. Take it away, bro.
Yeah.
Welcome, Joe.
Thanks. It was interesting when you were talking before. You said that everything seems to be moving together as of late. And really, I look at correlations a lot, and from what I could tell, things really haven't been. Wait, where's my slideshow?
So you see differentiation in some of the markets.
Yeah, in the short term, it does look that way, but in the longer term, it really hasn't. So what I was going to do is just go over some correlations and talk about it a little bit, and see what is related right now and what is not. So maybe we could just go through some of them. I have some examples. I first have to give a disclaimer, just to show that I'm not giving any trading advice, of course.
Okay.
So there it is.
It's all educational. It's all education.
It's all educational.
Okay.
So what I wanted to do is just talk about maybe what a correlation is, and then what a correlation coefficient is, because that's how you measure it. And then how are they used? We'll go over examples and then maybe some tips on it, some trading tips. I wanted to try to make my screen bigger, but I'm not sure how to do that. Is that right? Oh, there we go. Okay, that's what I wanted to do. All right, so correlations, right? So in finance, it's a statistic that measures the degree to which two securities move in relation to each other. Okay, so the important thing to look at when you're looking at correlations is we're looking for direction, right? Not magnitude. You're not going to see Bitcoin move 10% and then, well, you could. I mean, you're not necessarily looking for magnitude, but if Bitcoin moves 10%, you may not see S&Ps move 10%, right? But they may be moving in the same direction. If you have a reading of 1.0, it's a perfect positive correlation, right? And that means that they're moving together 100% of the time. And a rating of -1 is a perfect negative correlation, which means that they're moving in opposite directions 100% of the time. And when you're watching these correlations, they fall in and out of favor. So although they may hold on average, you have to watch and make sure that they're not turning and falling out of favor. So the way that we measure correlation is using a correlation coefficient, okay? And this is a statistical measure of the strength of the relationship between the relative movement of two variables, which in this case is two instruments, whether they're currencies, fixed income, Bitcoin. You could use this for anything, and the strength of the relationship varies. So what you're looking for when you're looking at the correlation coefficient is readings between -0.8. I'm sorry, you're looking for readings below -0.8, or you're looking for readings above plus 0.80. So
yeah,
if anything in between there is won't help you, because these are considered the below negative 0.8 or above 0.8, positive 0.8 are considered
Yeah.
strong, right?
Yeah, they're kind of at the hip. They're joined at the hip.
Yeah.
Okay.
And the best part about it is, let me just show you something really quick, is that you don't have to know what the formula is, because I know that you guys and a lot of other people use TradingView.
Yeah.
So if you're looking for correlation coefficient, you could just go up, and it's in the indicators up here, and you could just type in correlation coefficient, and then type in your symbol that you want to have the correlation coefficient with. Google, it defaults to Google, but if you're looking for the, let's just say we're looking for the E-minis, right? Then you hit apply, and it comes up on the bottom. So right now in a daily time frame, the dollar and the S&P are not correlated. But I know, as you were saying, things lately have been moving. In this case, it would be opposite directions. This is the daily time frame. If you go down to a 4-hour, look at it right here, negative 0.89. So this is statistically relevant. So this, you could say that, hey, I cannot trade the DXY because I don't have access to it, but I do have access to the S&Ps. So you can use this and say, if you see the dollar start moving lower, there's a possibility, given that
S&P is a rally.
Yes, exactly.
It's like the old days, what we saw this week, Joe, kind of, risk on, because there was a long time period where, well, we haven't had a lot of dollar weakness, but it's the closest I've seen everything move together this week. It's almost like they think the Fed's going to change course, which we know they're,
It's great to see. It's great to see when you have things like this. Like you said, the good old days, when algorithms weren't around, and people traded based a lot more on these. People, the algorithms will front run these sometimes now, because they know that people are looking at them.
Those bastards.
Yeah, I know. I can't say. Yeah, I know, they really are, right?
Yeah.
So to use a correlation coefficient, there's really two ways to use it. You can compare it to a benchmark. So as I was saying, so for example, I don't have access to the DXY, and in the US, I don't think a lot of trading FX trading platforms have that, because it's an index. So I don't think you can use it as an FX, but you can use it to trade the Aussie if there's a high correlation. So you can basically look at use it as a benchmark, the DXY. And the other ways you could use it as diversification, such as crude oil and the dollar Norwegian krone. And the Norwegian krone, they have a strong positive correlation. So if you wanted to diversify it, you could buy crude and buy the dollar Norwegian krone, or sell the krone in that instance. So you can use it for diversification. So let me just get into some examples we'll look at now. And I did these yesterday, so these are pretty current. So the biggest one that you'll always see that moves in opposite directions is the euro versus the DXY on the daily time frame. You could see that the correlation is negative 0.99. And you could see that going back, this is a daily time frame, that it's been here for a long time. This correlation is held. So that's one you could almost always count on, right?
You can, yes.
Because the euro makes up 58%, I think, of the DXY. So
it's
that's
a mirror image. Yeah,
exactly. And here's the shorter time frame. Okay, you could see it's negative 0.96. This is just a 60-minute time frame. So even on the shorter time frames, this one's holds, and that's good. That's something to look for. Now, the Aussie, on the other hand, falls in and out of favor. Right now, if you're trading this is an example where you can use the Aussie if you don't have access to the DXY. So if you see the DXY start to move, there's a good chance that the Aussie will move in the opposite direction because there is a strong negative correlation between the two. It's negative 0.92. We see here, I mean, it was positive during December. You could see that how it falls in and out of favor, and that's something you have to pay attention to. You have to find the turning points and find out when it's
You see
statistically
anything with,
relevant or not.
the big debate, Joe, with Aussie was, is it copper because they sell a lot to China? Is it their big mining country? Is it gold? Or is it risk? Is it S&Ps, risk on? It seems to be the most sensitive currency to risk on, risk off. Do you see it that way?
I see it,
Aussie?
and I see it not as much, I don't think, as in the euro. I find that the euro is a little bit more
Risk on, risk off? More
yeah,
responsive? Okay.
yeah. Let's see.
So, I mean, everyone's pronouncing, and I could understand why, that the dollar is peaked. Okay. Is there any scenario, let's say, for example, this rally in the S&Ps fail, and we take out, it's hard to believe it was only a week ago, last Monday, that we were, talking about, is it going to be a 20% correction, 30%? And there was a big hedge fund conference. Maybe you went to it in New York last week, Joe.
I did not.
And all the hedgies were there. And I keep, recalling this interview where they were interviewing this woman who's a hedge fund person. And it was during that day, and it had recovered. And you know what she said? We are so all relieved. Okay. So to me, that means that, a lot of people think that was it. And that if this is a failing rally, and we take out those lows, we'll see how relieved she is then. I'm just saying it seems too pat that that was the low.
Well, take a look at this. This is a daily time frame, but to your point, from earlier when you were speaking in the show, when you opened the show, look at the 4-hour time frame. That's a 0.93. So for since the 31st and the beginning of this month, so this week, it's been very highly correlated with stocks.
Yeah.
Right.
So I was saying that, you could have 25, 40 handles in the S&Ps happen in a heartbeat, that the Aussie actually could be a lower beta way.
Yes.
If you think this market is going to fade to be short.
Yeah. And so, there's two things there. Number one, like you just said, you can use the Aussie as a proxy, or you can use it as because you may not have access to S&Ps, right? Some people don't have access to futures currencies on their FX platform. Right. So you can use the Aussie as a proxy there in that case.
Okay. Any others? Okay. There you go. NOK.
So this here was dollar NOK versus the DXY. You can see that currently there's a positive correlation between the two, which makes sense if the dollar's going higher. You may see that. So a lot of people talk about dollar, CAD, and oil, right?
Yeah.
And they say that if crude oil is moving higher, then dollar, CAD is moving lower. There's a strong inverse correlation. However, this shows that is not the case. If you take a look at the correlation right now,
it's no correlation.
There's no correlation at all right now on a daily time frame between dollar, CAD, and crude oil. You can see that there was in January earlier, but in the last couple of weeks there hasn't, and it's actually been decreasing. So you can't use that on the daily time frame to trade.
So the trick
okay.
is, yeah, I guess the trick is knowing when there's a disconnect. And if you just use this, you'll find out after making several trades, thinking it was still, I wonder how long it would take someone to realize you can't use that correlation anymore.
So what I would say is use this level, the negative 0.0 and the positive 0.80, as long as you're above or below it.
I see.
You can use it to try and
Okay.
see
So
if
I'm
it's
curious where it turned back above 80. The rally was already underway. So maybe you had one bad trade and
exactly
you can't trust it now.
right.
Okay.
So it's like that with all your indicators, right?
Right.
You know, you
Yeah,
always
sure.
have you got to find the turning points.
Right.
You know, something's overbought or oversold, you know, it might start moving back into neutral territory.
Yeah.
Okay. Here's the 240 minute just to show you. It's still,
yeah,
on a smaller time frame, it has the same thing. And here, I'm wondering. Well, a lot of people talk about dollar yen, right? Yeah. Look at it lately. It's held. It was up here. It was statistically relevant for a long time. Beginning 2022, you can't look at dollar yen and trade it with yields anymore, right?
Okay.
Same with the S&P 500. What about the S&P 500 now, right?
Yeah.
So people trade dollar yen. They say one of two things. They say A, either it follows yields, or B, it follows the S&P 500 with a risk on, risk off.
Some people think it runs that it's a negative corollary to gold.
To gold? Yeah.
Yeah, and that at times it is, and it certainly isn't today.
It is not today. That's something I was going to say. You are right.
Or yesterday. Yeah.
Yeah. Oh, this was supposed to be up there. What other correlations with dollar yen? So I had this.
So really,
look at gold though.
Yeah.
It's negative 0.81. So it is on the border, but it's it may increase or it may decrease. So if you're looking at dollar yen and you want to trade gold or vice versa, if you're looking at gold, dollar yen may be a proxy. It's right on the cusp. Some people use a correlation. They look for correlations of negative 0.9 just as a buffer in between there. So it's right on the border. And the same with silver. It's also right on the border as well. So the correlation with dollar yen and precious metals may be coming into favor, but I went through, Dale. I went through and looked at dollar yen with every single instrument that I have, and every single stock that I have in my that I follow. And the only thing that I could find dollar yen correlated with right now was gold and silver, and Hang Seng and dollar yuan, and that's it. They were actually highly correlated. I think they were negative 0.93.
Yeah, the yuan actually put in a nice bottoming formation a week or so ago.
Yeah, it did.
Yeah, so that's a change, and that means yuan weakness, right? So they're going to devalue. That I remember someone saying that was something to follow if you're a gold trader. So
it's going to be. I was just going to say it's going to be interesting this week, but they're closed this week because they have.
That's right.
Year. Yeah, so when they come back, next week, we'll have to pick up that discussion.
Okay. Yeah. So some interesting things, Joe. Bitcoin. Okay. Yeah. Everyone's trying to find its identity.
Yeah. Well,
it's a chameleon.
I know. Is it risk on? Is it risk off? Is it a safe haven? Which is it
kind of led the way down in S&Ps, didn't it?
Look at it right now. They're highly correlated this year.
Yeah.
And if this
and what a weak rally that I've noticed. I know Blake was talking about if it gets over 40 or something, it's going to mean something. But compared to the S&P, it seems like it's participating more with risk off, but this bounce in Bitcoin compared to S&P is anemic.
Right. Yeah, it's very shallow. And as a matter of fact, overnight, just tonight, it's been in a couple $100 range, which is very tight, for Bitcoin to be
Yeah,
trading.
so this head and shoulders measures what? Negative 10,000?
19,666. Guess what? You know what that
Huh?
is? I don't have it on here, but
That was the old high at
previous
18,000. Yeah,
Yeah.
around there.
So that's something to keep an eye on. I have a feeling this will drift lower.
Okay.
Just real quick, the last thing, just some trading tips. Be aware that correlations that hold on average, I don't know what that is. I mistyped. Show periods of weakness in the short term and the long term. So you have to look at different time frames. So for example, we looked at the euro versus the DXY on a 60-minute time frame and a daily time frame. And the more time frames you see it on, the better use, or the more useful that the correlation is. Consider whether one instrument or whether they're divergent. So you want to look for, if you see them divergence in between two currencies that are highly correlated, then that may mean there's a change coming ahead, right? So you want to be careful for that. And then when trading inversely correlated markets, make sure that trades don't cancel each other out. So if you're I don't know, buying the dollar index, looking for the dollar to go long, don't sell the euro dollar as well, because you can use that.
Okay.
Either way, you're actually doubling up on the dollar right there.
That's what you're doing. You're doubling up rather than hedging.
Right. And if you buy, then you're hedging.
Okay. Well, Joe, I made a great presentation.
Yeah.
I really appreciate you coming in, and I'll give you send you a message later, and we'll get you back here in a few months.
There's my information if anybody wants to follow me on Twitter.
Yeah, Joe. Even though Joe had different functions when he was here, he always had a great feel for the market, would post nice charts on LinkedIn, and he's a great technician. So glad to have you, Joe. It's good to talk to you again, buddy.
It was fun to be here. Thank you very much.
And you're a special trading warrior, brother, because we were associates at one time. So, all right. Good things happen for you and your family, Joe. Those are my hopes for you. Okay. All right, buddy.
Stay safe, Dale.
All right. So that's a wrap. That's a wrap, Everett. Joe from New Jersey. That's right. And he can sing just like Bruce Springsteen. So, if you're a fan, send him a note. He'll send you a 8x10 glossy with his autograph. All right. So take it easy, everyone. Remember, don't just count your pips or correlations or anything else without counting your blessings. I'll see everyone tomorrow, and you could join the team in 20 minutes in the Morning Edge.
And I was gonna say, hey, Dale, thank you very much. And Joe, thanks for that great presentation. I caught most of it, but I'm actually gonna go listen to the recording today. So
yeah.
Good stuff.
Great. Yeah, great stuff, man. All right. Thanks, guys.
Thanks for having me, guys.
All right, guys, and attendees and community, have a great day. Adios.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.